Hey guys, in this video, I want to show you some stocks that I think you should buy and hold forever. And the funny thing is, the first three stocks that we're talking about are actually ones that I just bought right before this recording. So I might be a little biased on them, but some of these are pure growth stocks, and other ones have some nice dividend yields. Like one of these has a 4% plus dividend yield. Bought one of these this morning. So let's just get straight into the video. I want to share with you mainly stocks you've probably never heard of before and introduce you to those kind of companies. I don't just want to go over Google and Meta, but check out this stock right here. This is ticker symbol TOST or Toast. I just bought 12 shares of this company. And the thing is, for these kind of companies like Toast and some of the other stocks we're going over in this video, you don't want to have a huge allocation of these kind of stocks. I just have it, about $400 or $500, nothing crazy. But check this out right here. Here's why I bought this company. Look at the sales growth. It's up 26% year over year. Actually, the better way to analyze stocks is on the Moomoo app right here. If you want to download Moomoo app, it's in the link in the description. But look at this right here. Their financial technology revenue from Toast is up 25% year over year. So that's seeing some nice growth. But look at their subscription service revenue. This is up 44% year over year. I do like subscription revenue because it's all reoccurring. And look at this, it's up 44%. That's incredible growth. So that's why I like this company. They're making free cash flow. I mean, they had a little dip that one quarter, but look at the green number at the bottom, these year over year growth rates. They're really expanding, which is a great sign to see. Their gross margin is growing, and now they have a net margin. They have a 4% net margin. Look at this. So they actually made net income in the two most recent quarters. If we zoom out, this is why a lot of people probably didn't like Toast back in the day. They weren't making any money, but here they are now in the two most recent quarters actually making net income. And if we look at the analyst estimates right here of EPS, they're expected to keep on being profitable. So this one right here is one that I just bought. Again, I might be a little biased on them. And in this video, we're not really digging into what the company does. Like this is obviously like a software subscription kind of name, but I'm just showing you the financials, and then you can kind of draw your own conclusion. I'm kind of gonna go rapid round here. I don't want to waste too much of your time. So this next stock here is ticker symbol CALM. This is the stock that has a 4% dividend yield. Check this out. They have a 4.04% dividend yield, and look at the PE ratio to the left there. They're trading at 8 times PE, or 8 times trailing 12 months net income. And look at next year's net income. They're trading at a 6 forward PE ratio. So that is a ridiculously low and cheap evaluation. But that's because this stock is in the commodities industry. This stock sells chicken eggs. So yeah, they have one of the largest egg producers. They have a 20% market share for chicken eggs. So and this stock has done incredible. I just bought 4 shares of them. I don't want to miss out on the future rally. Again, $400, not a huge position, but still kind of meaningful. But look at this right here. Look at the actual profits that they're making. They made $200 million of net income just in the most recent quarter. So let's just average out the 4 quarters here. Let's just say I'm going to go really low here. Let's just say they make $150 million a quarter. Well, remember that they made $150 million a quarter, and look at the cost of their dividend. It only cost them $50 million. If you notice this, the cost of their dividend actually changes. So if we look at their dividend history right here, it is a little bit, it's static. It changes a bunch. Sometimes it's $1, then it's under $1. So the thing is, now they have like some thing where they'll only pay out dividends based off how much net income and free cash flow they actually make. But look at this right here. They have $800 million of cash on hand. So $800 million of cash. And are they diluting you? So you have been diluted 0.21%, but that's pretty much nothing. So no dilution there. Yeah, look at their diluted normalized DPS. These year-over-year growth rates make it look so hard to look at, but it was $4 in the most recent quarter. And remember, the stock is $104. So just in the most recent quarter, they made 4.5% of the market cap. And look at this. Remember, they had $800 million of cash. They have no debt whatsoever. So anyway, I know I'm kind of getting into the numbers here, but anyway, they have no debt whatsoever, $800 million of cash with that $5 billion market cap. So that's well over 10% of the market cap is just cash, low PE ratio, nice dividend growth. I mean, actually, they should benefit. There's a lot of conspiracy around the bird flu and stuff like that. If the bird flu actually happens, apparently it's supposed to benefit ticker symbol CALM. Oh yeah, so here's our Webull account right here. Here's the next stock we're going over. This is ticker symbol CPRX. And again, I love looking at the valuations of the company. And look at this one's valuation, the PE ratio right here. They're trading at 18.5 times next year's net income, 18.5 forward PE. So I just picked up 20 shares of this company. And look at the top right, the market cap. This is a $2.7 billion company. So again, not a huge market cap. And look at this sales growth. This is actually incredible. It's up to 128 million. That's up 25% year over year. Revenue's growing double digits. And look at this. They're actually profitable, making net income every single quarter. I mean, there was that one-time adjustment there. I think they had some kind of small acquisition. It hurt their net income, but that it doesn't even matter. Look at this balance sheet right here. This is incredible. Yes, if you notice, the assets just go up every single quarter. It went from 700 million to 770 million just in the most recent quarter. So check this out right here. Look at how much cash they have. Remember, $2.3 billion company, $440 million of cash, and no debt whatsoever. So this is a debt-free stock. This one and Calm are both debt-free companies, which is it takes some risk off the table when the company has no debt whatsoever. If you look at the total common shares outstanding, there is one thing you got to be careful of. You have been diluted 11% year over year. Is that right? Let me double check this. Yeah, so you have been diluted 11% year over year. So that was from the acquisition that they did. Look at that. This is why I like looking at the numbers here. They issued 140 million of shares that one quarter, but ever since then they haven't really been issuing much. So they could even do some share buybacks, but I couldn't see them doing share buybacks when the stock is at all-time highs. And to be honest, I'm not even mad at them for diluting the shareholder. They're diluting the shareholder when the stock is going up so much. And it's certainly, they don't need the money for, you know, because they're losing net income. They did an acquisition or something like that. Anyway, I like CPRX. That's probably why their cash position is growing so rapidly. Maybe they're issuing shares and holding cash. I don't know. Always do your own research. Nothing in this video is financial advice. So this next stock right here is ticker symbol AMD. We've all heard of this one before. They're like NVIDIA's biggest competitor. And let me actually head over here to the Moomoo app. Because this is where I like to do the analysis so we can see the revenue breakdown for AMD. So yeah, this stock price is not pretty much been straight down. So check this out right here. If we look at their PC GPU market share, it's still holding strong, 17% market share. But look at this right here. The main reason you'd want to buy AMD is for the exposure you get to data centers. Look at this data center growth. Like, we got to really look at it on a quarterly basis. Look at this growth. It just hit a new record in the most recent quarter. It is up 69% year over year. So that's their data center revenue. Look at their client revenue, whatever this is. This is up 58% year over year. So some incredible growth on their client revenue. What about their embedded revenue? So yeah, look at this. Here's where you got to be careful. Again, this is a smaller segment of their business, but it's down 13% year over year. Yeah, so that's only 13% of their business, but it is down 13% year over year, so not great. Here's some good news that the company had. Look at this. They made $1 billion of free cash flow. That's a lot of money, $1 billion of free cash flow. But here's what analysts didn't exactly like. Look at this net income year over year. The net income was still positive. It was half a billion, but it was down 27% year over year. So I don't think analysts love that, but they're still a very financially healthy company. Look at this balance sheet right here. They actually have no net debt whatsoever. They have such little liabilities. I'll show you that right here. So here we are on AMD. And I'll be really quick with this. I appreciate y'all sticking with me here. Don't forget to drop a like on the video if you like how I show you the numbers. So look at this right here. They have $5.13 billion of cash plus another $5 billion of inventory. Wow, their inventory is growing and growing. So $5 billion of cash. How much debt do they have? In total debt of $1.7 billion. Look at that. They're even paying off their debt. So they could pay off all their debt right now if they wanted to. No rush to pay that off. And look at that. They're even doing a little bit of buybacks. I think they might even do a lot more buybacks now that the stock is really suppressed. That's the thing about them. Yeah, you've only been diluted 0.37%. So basically, you haven't been diluted with AMD. So again, I do own this one. I am biased, but you got to watch out for the growth rate there of their net income. But still, the data center sales growth and the client sales growth is why I'm liking this one. But I'm guessing if we look at the net margin right here, yeah, look at this. This is kind of why the stock fell. It's way better than what happened back in 2023. It even went negative there, but yeah, only a 6% net margin. So yeah, sales were incredible. Look at that sales growth. That was a record amount of sales, I believe. Yeah, it was up 25% year over year, but the net income was down. So yeah, they got hurt in the margin. So that's the news around AMD. Some other stocks that reported earnings. I guess this is again a lot of these stocks you'll notice in here are very small positions of mine. Like look at Robinhood. Dude, Robinhood actually had the most phenomenal earnings yesterday. Look at this. This stock is at a new all-time high record. We only own 5 shares left of Robinhood. But yeah, they're actually making net income now. Look at that. They're a profitable company. They used to lose money every quarter. They were sometimes losing 1 billion a quarter. So yeah, Robinhood really turned things around here. Another stock I actually bought today was one more share of Yelp. Not much of this company. This one's really like a cash, no debt play. So look at this right here. They're making net income every quarter. Look at that. It's a lot more consistent than what it used to be. Remember this number? They made 38 million of net income just in the most recent quarter. And let's see how much cash they have. They have $397 million of cash. So 400 million of cash. And yeah, no debt whatsoever. They are a debt-free company. And this is the best part about this company is the amount of buybacks they're doing. This is such a shareholder-friendly company. Since Yelp doesn't pay a dividend, they just do insane share buybacks. They just want the stock to go up. So yeah, if we go to the total common shares outstanding year over year, dang, you now own 3.37% more of the company than you did 1 year ago. As long as Yelp keeps this up, maybe in the future Yelp could even pay a dividend. Maybe in a decade or something. I don't know where this company is going to be in a decade, so I don't want to have a huge position in them. But anyway, if you did find some value in this video, please drop a like for me. And if you leave a comment, I'll make sure I respond to every single one of them. And hit the subscribe button. I know I'm kind of asking for a lot there, but hit the subscribe button if you do like the channel. Hope you have a great rest of your day. My name is Nathan Robert. And check out my previous video up here. Hope you have a great rest of your day. See you.